How's it going, everyone? It's Sam. I shot and recorded and edited and had everything ready for a video on Genius today, or GNUS, and I got news partway through the day, and you might have too if you're an investor or looking at the stock, that Arnold Schwarzenegger is now a significant investor in the stock. Now, this changed a lot of what I wanted to get across in my video, but I really want to keep the core of my video in there because I think all of it is still really relevant. I mostly looked at the balance sheet. So at the end of the video, I'm going to include the news about Arnold Schwarzenegger and how I think this will affect the stock. But as you can see here, the price is up 9% on the day, and it was up 20% at the beginning of the day. So I just felt like it wasn't right not to include information that is most relevant. So I didn't upload it. And if you don't mind dropping a like just because I had to take it down and put some more stuff in it, that's much appreciated. So we'll get right into the video right where I started off this morning. How's it going, everyone? It's Sam. Today we're going to look at GNUS brands and do a little bit of a closer look. And I did a video before, so if you haven't seen that one, definitely check that one out. I'll link it here. That way you just have a good idea of where I'm coming from and where I started to think about this stock. And I know a lot of people are still buying it because in the trending stocks here, GNUS brands is selling for, I believe it's 100 million in volume, which is just a ton. A lot of people are going in a stock, which is why it's going up and down 20% in a day. So we're going to take a look at it. Also, I want to thank you guys for liking, commenting, and subscribing. It really does help out the channel a lot. Before we get into this, we are going to be doing a video on how much I made the first week during YouTube, and I think it's going to surprise some people, and we're going to do that here in just a few days. But we're kind of in the final push for this. Of course, I want long-term growth, but just to really round out the week, I'd like to have a couple of good days where we see some growth here, which we've been doing, and it's been great. But liking and commenting really does help that out. I had a couple people that commented for the first time last time that just really like the channel, so that is much appreciated. So let's get into GNUS brands. So this is a kids entertainment company based out of, I believe it's California, Beverly Hills, and they've been in the news, in stock news a lot recently because they came out and said that they were going to have this new kids network, and it soared like crazy. So it's called Kartoon Channel, and as you can see here, even just a few weeks ago it was $1.40, and it went up to $8, and I think the intraday was much higher, but then it dipped back down, and then it's been up and down about 20% each day. So a lot of people have been wondering about this. A lot of people have been trying to figure out the best time to sell and to buy. And it's difficult to know when to sell and to buy because you never know what's going to happen day to day. But I usually look at long-term outlooks. What's it going to do in the next month, months, couple years? And with this stock, honestly, that's really difficult too. But we're going to get into it and just talk about whether I think you should buy it or sell it. Because like most stocks that are growth stocks, this is a growth stock for sure because it's so volatile, and it's really about a long-term outlook. You're not looking, for the most part, at selling it in a few days, even if it's a couple months once they start showing some revenue. Of course, if it shoots up 3 times as much as it is now, you might want to get out. But this is definitely one that isn't going to be a long road to being able to make a ton of revenue. So it's really a growth stock here in the short term. So let's take a look. And as we see here, 170% up since May, late May. But we're going to take a look at why I think you should sell this stock and not buy it. Just because I think it's very, very risky. And there are some risky stocks that I think are still value, or some growth stocks, let's call them growth stocks, I think are still of value. For example, I talk about NAT stock a lot, North American Tanker, and some people still hate it because they've lost money on it, but I think that that actually has legs to go somewhere. I think that's gonna produce good value over time, and along with the other tanker stocks too, I think that they play a valuable role, and I think that they're a little bit less risky than an entertainment company like this. So before we get into it too, I'm not a financial advisor, I'm not a stock analyst, so don't base your decisions just on me. But we're going to take a look at this article by The Motley Fool, and it's a little bit biased because it's about reasons to sell GNUS, but most people are talking about selling GNUS right now anyway, so I don't think it's too biased. I think they're just looking at the fundamentals. So they talk about why it's a growth stock, but they've actually been showing that the expenses have gone up a lot faster than the revenue, and a lot of that's just because they think that the stock's going to pop off, or a lot of people think that the stock's going to pop off here soon with their network that's going into place, but it's really hard to tell how much money that's going to make, honestly. This is a stock that could go down 70% in the next week. We don't know, and it's actually done that over the last 5 days. If we look here, it's gone down 36%, but poor fundamentals. It's not growing their revenue as fast as they're growing their cost of goods or their expenses. So that's one thing. They're trying to scale, so I kind of understand that. But then let's look at the equity dilution. So a lot of the time people don't look at the number of shares outstanding, and I've actually had people ask me to do that with NAT, so look at how many shares are outstanding, so that way you can take a look at what the old stock price was compared to what it is now. And let's just see what GNUS was years ago. So they were around a $7, $5, $6 stock. So a lot of people are saying they can be right back up there with where they were before, but they've diluted a lot of shares. So I have it pulled up here. If we take a look at 2015, they had 2 million shares, right? So number of shares, 2 million. Now they have 25 million. And we've seen that recently where some press releases came out that GNUS was going to start selling stock. They're going to sell, I believe it's 15 million shares, but they were going to sell a bunch of shares at between 35 cents and $1.20. So this is just, I believe, at the end of May. So they were going to raise about $30 million, and that's kind of crazy because people are buying this now for $4. They're buying it for $8 before, and their company 2 weeks ago, 3 weeks ago, was trying to raise money, which I get if you're in a pinch and you're trying to raise some capital. But usually, if you think that your stock is way undervalued, you don't sell shares at that undervalued spot, right? So you buy back shares when it's like that, and maybe they don't have the money to do that, but I would think that they could draw some kind of credit line or some other way of funding besides just issuing a bunch of shares at a cheap rate. Even if you had to do that in the short term and just do 5 to 10 million worth or a couple million worth, and then try to issue shares a few months later once your stock goes up in value. But they didn't do that. They started selling shares at 35 cents. So that's one thing to look at there. Now let's take a look at their revenues. So as we just looked at, in 2015 they had about 2 to 4 million shares. Now they have at least 25 million. And actually we can look right here, 96 million shares outstanding. So that is pretty nerve-wracking because as we see here, they've been so much less than that before. So millions of shares right there. It's quadrupled in the last quarter. So they're trying to raise a ton of capital. If we look at their revenues, so 900,000 in 2015, 900,000 in 2016, and it goes up to, let's say, December, 6 million. So I'm assuming their revenues are going to be much higher this year. But even if we just look versus what it was at in 2019, so 10 million shares, let's say, just to split the difference here, they have only 6x'd their revenue, and they have about 5x their shares, so they really haven't grown in revenue really at all in the last 4 years compared to the number of shares outstanding, so their revenue per share hasn't really gone up. Also, if we look at their net income, they are making less and less money each year, and your shares are being diluted. So that can be a little bit misleading when you're looking at earnings per share, because typically if you go up in earnings per share or you become less negative here, that's a good sign. But you know, they've diluted their shares. So let's say 1 year you start up a business, a lemonade stand, and you lose $10. The next year you lose $12, but you've split it with another person that was also invested in the lemonade stand, okay, that's similar to up here. We lost $12 now, and our EPS is going up because before we were at negative $10, now we're only at negative $6 if we lose $12. That looks like on paper the earnings per share is going up, but it's really just because we've diluted the shares. So when it does turn positive, you're going to make a lot less money than you used to when they were making money when they had less shares. So that's something to consider. There's less upside potential because of the dilution, because this has diluted a lot. And as we look at their cash and short-term investments, in 2015 they were at $5 million. Now they're at $300,000 at the end of 2019. And they did come out with a report that said that there were a bunch of misleading statements recently. This is the CEO that came out with this. And one of the main things they talked about is their balance sheet update. It says that they have enough cash on their balance sheet to meet existing obligations and operate on its business for at least 60 months. So if you feel comfortable with that, that's great. But the reason that probably is the case is because they offered all those shares. They offered a ton of shares. I think it was, like I said before, I think it was $30 million worth. And I don't know, that doesn't make me feel any better about this stock. That just makes me feel like they've set it up so that they can say that, and now they have a little bit of running room, a little bit of room to grow because of all those shares. But like we've said, they have a lot less upside now, and they just can't grow as quickly as they were before because they have so many shares now. So in the end, I don't know how much they're going to make. I think it's really hard to determine how well a streaming station or a new network for cartoons is going to make. How much it's going to make is going to be very difficult to know before we see it. But it just seems like a really high risk play to me without much potential upside because of the dilution of shares. And if they're willing to dilute this much now, they might be willing to dilute in the future. That's just speculation, but if they come out with more content or some other thing that they have to dilute shares significantly on, as you can see here, they've been diluting shares like crazy. And then here is the news for today, because like I said, I want to include this. GNUS Brands has a new significant investor in Arnold Schwarzenegger. So he is a very successful politician, entertainer, actor. He's big in the community. He is someone that brings a lot of importance to the stock and someone that is going to bring a lot of weight and a lot of attention to the company. So he is starring in a new show called Stanley's Superhero Kindergarten. So he's starring in it and he's producing it. It's expected to premiere in about a year or a little bit over a year on Amazon Prime. But it's one of the last things that Stan Lee worked on before he unfortunately passed away. But this news came out this morning, and I think it's important to know that all that stuff from earlier in the video is still relevant. Their balance sheet is still the same. However, they have actually issued a lot of shares even past what I said earlier. So I said there were 100 million shares out there that they have issued. But I saw this article this morning too, and this is from last week, that they're going to sell up to 60 million more shares. And in this article, it says that Schwarzenegger is going to give up some of his pay at the beginning to have stock options. So he's going to have the possibility to buy some stock, probably at a discount or wherever it is now or wherever it was a while ago. So they are issuing 60 more million shares and possibly some for Arnold. So I think that a lot of eyes are going to be on this now. Arnold Schwarzenegger is going to throw a lot of attention on it. He has a big social media presence and he has a lot of weight behind his name. So I think that this kind of might turn the stock into just a little hype play for a couple weeks into something that maybe could produce a lot of revenue. Because if you're, let's say you're 40 years old and you remember Arnold Schwarzenegger back in his heyday with the Terminator and Rambo and stuff, and you hear that he's on TV and your kids are looking for something to watch, you might just throw it on and watch with them. I think that would be pretty interesting. I probably will check it out myself once it comes up. But it still shows that there's a lot of dilution in the shares. So even if they do earn a lot of revenue, that's going to be watered down from what it was going to be a few months ago. So keep that in mind. Now, whether it's a buy or a sell now, I think that it's, again, one of those things where it could go up 30%. and do really well for itself, or 100% in the next year, but it's still such a risky play. They're diluting shares like crazy. You don't know if they're going to dilute in the future for the sake of more growth. So I'd still be cautious about it, but let me know what you guys are doing below. Do you think this is a buy now? Do you think it's a sell because of the increase in stock price and the increase in dilution? I'd be interested in hearing your take on it. So thank you again for liking the video and commenting and subscribing, and I will see you in the next one. Bye.